Did you know that some of the most common things people believe about taxes is actually wrong? I'm a CPA and I've been unraveling the complexities of taxes for decades. Today, I'm going to share my top 5 misconceptions about taxes that might just surprise you. Whether you're a tax pro who thinks you've heard it all, or someone who finds taxes confusing, this video is packed with fun surprises and insights. Ready to find out what you might be getting wrong about taxes? Let's dive in. Hi, I'm Noel Lorenzana. I'm a CPA who often wishes he chose another profession, but that's for another story. Taxpayer misconception number 1. Taxpayers often say, "How come I didn't get a return?" You mean, how come you didn't get a refund? I think that's really funny. It's hilarious, actually. But if you don't get it, it's because they meant refund, not return. The taxpayer should have said, "How come I didn't get a refund?" You see, a return is your tax return. If you prepared or had someone prepare your tax return, then there you go. You got yourself a return. A refund is what you get after you filed your tax return. That is, if you've paid in more in taxes than you owe, so what you get back is a refund. I don't know where this originated or why people think that returns mean refunds. It's really funny to us tax professionals. We laugh every time we hear it because it makes absolutely no sense. It's like saying, "I need to put car in my gas." Wait, what? Yeah, I need to put car in my gas. Sorry, that's not even a good example, but you know what I mean. Taxpayer misconception number 2. Taxpayer says, "I sold stuff on eBay and didn't receive a 1099, so I don't have to pay taxes on it, right?" Wait, what? No. 1099 or not, if you earned income, it's technically reportable to the IRS. 1099 reporting is generally helping to keep people honest. But okay, so right now for 1099K reporting, it's $20,000 and 200 transactions. So some people think incorrectly if they sold $19,000 of stuff on eBay and they didn't receive a 1099, well, they don't have to report it. I'm sorry, I hate to break it to you. 1099 or not, those transactions are reportable to the IRS and potentially taxable, or maybe not taxable. It really depends if whatever you sold was sold at a profit or not. You could actually be engaged in some sort of business activity and have a loss for the year, which can reduce your taxes. So basically, just because you didn't receive a 1099 doesn't mean it's tax-free. Does that make sense? Let me know in the comments if it doesn't. By the way, I did a bunch of 1099K videos on how to report that on your taxes. If you want to learn more about that, click on the playlist up here. Taxpayer misconception number 3. So clients often ask, "Noel, I've got this rental property. My renter left without paying for 5 months of rent. I can deduct that on my taxes, right?" When you first hear this, it does sound somewhat reasonable. After all, you weren't able to collect on 5 months of rent, so you're basically out that money, but can you actually deduct that on your taxes? Does that even make sense? Well, if you think about it, that lost revenue is income or potential income that you didn't have to report on your taxes. So if you did, or were able to deduct the lost revenue, which you're not able to, by the way, you would actually be double dipping. You would be receiving a double tax benefit. So no. The IRS does not allow you to deduct lost rent or lost revenue due to unpaid rents. Let me put it another way. You basically don't have to report as income the rents that you didn't receive. So essentially, it's deducted already. Does that make sense? Sorry, that's just how it is, but I do see how people can get confused by this. I may not be explaining this in the best way, so if any of my tax pro friends can explain it better, please do so in the comments below. Thank you very much. Moving on, taxpayer misconception number 4. Taxpayer says, "I bought a home, so I get some nice tax breaks, right?" Actually, I hate to break it to you, but the tax breaks for owning a home pretty much went away. This is primarily due to the Tax Cuts and Jobs Act of 2017, but that's set to expire at the end of 2025. So if you own a home, typically you're able to deduct your mortgage interest, real estate taxes, income taxes, sales taxes, maybe medical expenses if they're high enough, and charitable contributions. The Tax Cuts and Jobs Act limited the deduction for taxes to a maximum $10,000, so that severely limited the possibility of itemizing your deductions on your tax return. If you're not itemizing your deductions, then you're taking the standard deduction, which everybody gets. Basically, you're going to take whichever is higher since it gets you the biggest tax benefit. Make sense? Now, I do feel really bad for the people who bought a house and expected a huge tax break or tax benefit, but they end up not receiving it. At the end of the day, they were probably misled unintentionally by maybe the real estate person or someone else, or maybe they just had outdated information. But as of right now, there's little to no tax benefits for owning a home. Now, on the state level, that could be completely different because in Illinois, for example, they offer a 5% tax credit on real estate taxes paid. So there's that. And last but not least, taxpayer misconception number 5. New client comes in, so tell me about your tax situation, I say. It's typically a woman who does this. She says, I'm married, I work 2 jobs. I ask about her kids or dependents. She replies back with, oh yeah, I have 2 kids, and I also want to claim my husband. Wait, what? Yeah, I want to claim my husband too. He doesn't work, and I support him. I don't know if she's done this before, but sorry, you can't claim your husband as a dependent on your tax return. I understand you probably think he's a bum, maybe he doesn't work, maybe he's going through something. But that's not how it works. You can't claim your spouse as a dependent on your tax return. Now, you can file as married filing jointly, and that does come with some indirect tax benefits, and you can definitely claim your kids, but not your spouse, regardless if you support him financially or not. Sorry, not sorry. All right, my rant is over. These are my top 5. What are your tax misconceptions that you might have had or maybe you've encountered? Let me know in the comments. By the way, tax season is in full swing. My apologies if I'm not able to keep up with my weekly publishing schedule. I'll do my absolute best, but take no offense, YouTube isn't helping me pay the bills much. Speaking of bills, I do have a full course on how to file taxes for your side hustle or as a freelancer. Check it out, buy it, it'll change your life. I'll link it at the end. Thanks for watching and see you in the next video.